Welcome to the deep dive. So you asked us about getting started with silver investing, figuring out the options, and that's exactly what we're doing today.
Yeah.
We've been looking at this really detailed piece. It's called, What Are the Different Ways to Invest in Silver? It's by Doug Young.
Right. Doug Young, he's got, what, over 20 years in finance and precious metals, so a pretty solid source.
Exactly. And our mission here is, well, to pull out the really key insights for you so you can feel, informed without getting totally swamped by all the details.
Yeah, totally. Doug's article covers a lot of ground, like the whole spectrum of silver investing. And for you wanting to get up to speed quickly but properly, this should give you a structured way to think about it. We'll hit the pros and cons.
Aiming for those aha
Yeah,
moments, right?
exactly. The practical stuff, the things that click.
Okay, so let's start with the most obvious, I guess, like actually owning the silver, physical stuff.
Right. The tangible assets. The main ways here are really silver, bullion, bars, and coins.
Bullion.
Okay. Yeah, these are like the standard forms. They have known weights, known purity. Pretty straightforward.
And they're easy to get hold of?
Generally, yes. You can buy and sell them through dealers, lots of online platforms too. Bars come in different sizes, 1 ounce up to a kilo, even bigger sometimes. Coins are often those standard 1 ounce types.
And what's the big appeal of starting with bullion? Why that route?
Well, a couple of things jump out. First, liquidity. It's usually pretty easy to sell if you need cash.
Okay.
And second, the cost over the actual silver price, the spot price premium. It tends to be lower for bullion compared to, say, jewelry or collectibles.
Right, because it's more standardized, less about design.
Exactly. The market's just more efficient for basic bullion.
Now, the article also mentions jewelry and silverware, like grandma's silver tea set.
Yeah.
Is that really an investment in the same way?
Well, yes and no. I mean, it contains silver, so it has value based on that.
Sure.
And this is big, but for investing, the premium is usually much higher. You're paying for the art, the craftsmanship, maybe a brand name.
Got it. So more than just the metal.
Way more. So great for sentimental value, maybe some financial value, but probably not the best if your main goal is just tracking the silver price. Plus, verifying the silver content and authenticity can be trickier sometimes.
That makes sense. Okay, so if you do go the physical route, bullion maybe, security is a big one. What did the article say about keeping it safe?
Oh yeah, crucial point. Storage. The piece lays out the usual options. You've got like a home safe.
Convenient.
Convenient, yeah, but maybe not the most secure depending on the safe and, your situation.
Right.
Then there are bank safety deposit boxes. More secure generally, but you pay annual fees and can only access it during bank hours.
True.
And the third option is using professional storage facilities. These guys specialize in precious metals, often comes with insurance, climate control, that sort of thing.
So it's that classic trade-off, convenience, security, cost.
Pretty much sums it up.
So why would someone choose physical silver, given these storage hurdles? What are the main drivers?
The article points to a few key reasons. One is that feeling of it being a safe haven, holding something tangible, It gives some people peace of mind, especially when markets feel shaky.
That's a psychological factor.
Definitely. And then there's the intrinsic value. Silver isn't just shiny, it's used in tons of industries.
Oh yeah, like electronics.
Electronics, medicine, solar panels, that demand is real and growing. It gives the value a sort of fundamental floor.
And inflation.
Yeah, that's the other big one. Historically, physical silver has sometimes acted as a hedge against inflation, holding its value better than cash when prices rise.
Okay, so tangible security, industrial demand, potential inflation hedge.
Got it.
Now, what about people who maybe don't want a lump of metal in a vault somewhere? The article talks about silver securities and electronic investments.
Right, the paper silver side of things, though it's mostly electronic these days. If you don't want the hassle of storage and insurance, there are other ways. The big one mentioned is ETFs, exchange-traded funds.
ETFs, yeah, we hear about those all the time for stocks. How do they work for silver?
Well, basically, a silver ETF is a fund that trades on a stock exchange, just like a stock. Its goal is usually to track the price of silver.
So the ETF's price moves with the silver price.
Ideally, yeah, very closely. Some might hold physical silver in a vault somewhere to back the shares. Others might use derivatives or track mining companies. But the point is, you buy shares of the ETF through your regular brokerage account.
And the advantage is there.
Super convenient, easy to buy and sell during market hours, so high liquidity, accessible to almost anyone with a brokerage account. And as the article notes, the management fees, the expense ratios are often lower than traditional mutual funds.
Sounds pretty slick. But I saw a mention of a key disadvantage, counterparty risk. What's that about?
Ah, counterparty risk. Okay, so basically it's the risk that the other party in a financial agreement won't hold up their end of the deal.
In the context of an ETF.
Yeah, so like if the ETF is supposed to be backed by physical silver, there's a theoretical risk related to the custodian holding that silver. Or if it uses derivatives, risk with the counterparty to those contracts.
Hmm. How big a risk is that, really?
For major, well-established ETFs, it's generally considered low. They have structures and regulations in place. The article does mention that contracts often have clauses to protect the fund provider in, like, extreme situations. So it's something to be aware of, but maybe not the biggest worry for most people using standard silver ETFs.
Okay, good to know. The article also talks about investing directly in silver mining company stocks. How's that different from an ETF that tracks the silver price?
Very different, actually. Here, you're not just betting on the price of silver, you're investing in a specific business that mines silver.
So like buying shares in Apple or Google, but for a silver miner.
Exactly. Your profit or loss depends on how well that company does. Is it finding silver? Is it mining efficiently? Is management making good decisions? How are its costs?
So the company could do well, even if the silver price is just okay, or vice versa.
Precisely. A well-run company might see its stock soar even if silver prices are flat. Conversely, a poorly run one could lose money even if silver prices are rising.
More variables involved then.
A lot more, and more risks too, as the article points out.
Yeah.
You've got operational risks or problems at the mine, political risks, maybe the mine is in an unstable country, environmental regulations. It's a much more complex bet than just buying silver itself.
So research is really key there, understanding the specific company.
Absolutely crucial. Financial health, production levels, management quality, and diversification, maybe owning shares in a few different miners, becomes even more important. You need to know your risk tolerance for this one.
Right. Okay, the last electronic option mentioned was mutual funds related to silver. How do these fit in compared to ETFs?
They're kind of similar to ETFs in that they pool investor money to buy a portfolio of assets, but the key difference is usually active management,
Yeah.
meaning there's a fund manager or a team actively picking which silver-related assets to buy and sell, maybe mining stocks, maybe some physical silver, maybe other derivatives. They're trying to beat the market, not just track it.
Ah, okay, so potentially better returns if the manager is good.
Potentially, yes, but that active management comes at a cost. As the article notes, mutual funds typically have higher management fees, that expense ratio again, compared to passive ETFs.
So you pay more for the manager's expertise, hoping it pays off.
That's the idea. You really need to look at the fund's past performance, though that's no guarantee. It's a specific strategy and definitely those fees to see if it makes sense for you.
Got it. Okay, let's shift gears a bit. Incorporating silver into long-term planning retirement savings. The article talks about silver IRAs. What's the deal there?
Right, a silver IRA. It's also sometimes called a precious metals IRA. It's basically a type of self-directed IRA, an individual retirement account, but one that lets you hold physical precious metals.
Physical, like
Yeah.
actual bars and coins inside your retirement account.
Exactly. Silver, gold, platinum, palladium. The IRS has rules about which specific types and purities qualify.
How do you get money into one?
You can usually roll over funds from an existing retirement account, like a 401k or another IRA, or make new contributions each year, up to the usual IRA limits.
And where does the silver actually live? You don't keep it under your mattress.
Oh, definitely not. That's a key rule. The physical metal must be held by an IRS-approved custodian in a secure depository. You can't take personal possession of it while it's in the IRA.
Ah, okay. So there are specific companies that handle this.
Yes, you typically work with a specialized silver IRA company that helps set up the account, facilitate the purchase of the metals, and partners with a custodian and depository to ensure everything follows IRS rules.
So why would someone go through that trouble? What are the main reasons to consider a silver IRA?
Well, the article hits on a few key points. One is that potential protection against inflation and economic downturns, that safe haven idea again, but within your retirement savings.
And the tax benefits.
Yes, that's huge. Just like a regular IRA, the investments grow tax deferred. Or if it's a Roth Silver IRA, your qualified withdrawals in retirement could be completely tax-free. And finally, diversification for your retirement portfolio. Holding some physical silver can reduce your reliance on just stocks and bonds, potentially smoothing out returns and hedging against market volatility.
The article actually names a few companies, right? Augusta Precious Metals, Gold Co., American Hartford Gold.
Yeah, it mentions those as some of the top players.
Mm,
It doesn't go super deep into comparing them, but gives you a starting point for research if you're interested.
good to know. Okay, so we've covered what you can invest in. Now, how should you approach it? The article dives into strategies to maximize silver investments.
Right, because just buying something isn't enough. You need a plan. And the first strategy mentioned is, no surprise, diversification.
We keep coming back to that.
Because it's fundamental. In silver, it means maybe not putting all your eggs in one basket. You could hold some physical silver, maybe an ETF for liquidity, perhaps a small slice in mining stocks if you have the risk appetite, spreading it out.
Makes sense. Reduce risk, potentially improve returns. What about the long-term holding approach?
This is the classic buy and hold strategy. You buy silver, often physical or maybe an ETF, with the plan to keep it for years, maybe even decades.
Based on the idea that it'll go up eventually.
Pretty much. Believing that scarcity and growing industrial demand will push the price higher over the long haul, you're trying to capture that big long-term trend and not worry too much about the day-to-day bumps. Plus, you minimize transaction costs.
Okay, patient investing. Then there's dollar cost averaging. How does that apply here?
Yeah, dollar cost averaging, or DCA, it's about discipline. You invest a fixed amount of money at regular intervals, say $100 every month, into a silver ETF.
Regardless of the price.
Exactly. When the price is low, your $100 buys more silver. When the price is high, it buys less. Over time, this averages out your purchase price.
Takes the guesswork out of timing the market.
That's the goal. It reduces the risk of putting all your money in right at a peak and helps you build a position gradually without stressing over short-term fluctuations.
Okay, that sounds sensible for building up holdings. What about the opposite end of the spectrum? Trading silver for short-term gains.
Yeah, this is a totally different beast. This involves actively buying and selling silver, or maybe silver futures or options, trying to profit from those quick price swings.
Day trading almost.
Could be, or swing trading over days or weeks. It requires constant market monitoring, technical analysis, understanding charts and indicators, making fast decisions.
High risk, high reward territory.
Definitely higher risk and higher transaction costs because you're trading frequently. It's potentially profitable, but you really need to know what you're doing and have the time and temperament for it. Not for everyone.
Clearly. Okay, so lots of options, different strategies, which leads to the big question. Choosing the right silver investment method. The article stresses it's personal.
Absolutely. There's no single best way. It really boils down to you. What are your financial goals? Are you trying to preserve wealth, grow it aggressively, hedge against inflation?
And your tolerance for risk.
Crucial. How much volatility can you stomach? Physical silver might feel safer to some, while mining stocks are inherently riskier. ETFs fall somewhere in between. Your timeline matters too. Investing for retirement is different from saving for a down payment in 5 years.
And just personal preference, right? Comfort level with physical versus electronic.
Totally. Some people just like holding the metal. Others prefer the simplicity of clicking buy in a brokerage account. Both are valid.
What about the practical side? Costs and fees.
You absolutely have to factor those in. The article makes a good point here. For physical, it's the premium overspot, potential storage fees, insurance. For ETFs and mutual funds, it's the expense ratios, maybe brokerage commissions. These eat into your returns, so you need to compare them.
And finding good places to buy. Dealers, platforms.
Super important. For physical silver, look for reputable dealers. Check their track record, pricing transparency, customer reviews. Are they part of industry groups like the ANA or ICTA? For electronic stuff, stick with major, well-established brokerage platforms. Check their security, fees, customer service.
And silver shouldn't exist in a vacuum, right? It needs to fit with your other investments.
Exactly. The article emphasizes balancing silver within your overall portfolio. How does it fit with your stocks, bonds, real estate, other assets? It should complement them, add diversification. You need to look at your total asset allocation and maybe rebalance periodically.
And finally, the need to stay plugged in, monitoring trends.
Yeah, you can't just set it and completely forget it, especially with something like silver, whose price can be influenced by so many things: inflation, industrial demand, geopolitics, currency movements.
So keeping an eye on financial news, maybe using investment tools.
Right. Stay informed, understand what's driving the market. It helps you adapt your strategy if needed. Spot opportunities or manage risks. Be proactive.
The article even dangles that carrot about a potential 20% surge for silver in 2025. Obviously just a prediction, but it highlights why monitoring is relevant.
Exactly. Things change, and it's good to remember who's writing Doug Young has the experience, which adds weight.
But also that disclosure.
Right. The website might get paid for recommendations. It's just a reminder, always do your own homework. Don't just rely on one source.
Absolutely. Okay, so wrapping this deep dive up, we've really covered a lot of ground. From holding actual shiny bars
Right, the physical stuff, bullion, coins.
to clicking buy on an ETF
Hmm.
or even digging into mining company reports.
And then integrating it into long-term savings with something like a Silver IRA.
Plus the different ways to approach it, long-term holding, dollar cost averaging, or even active trading.
Yeah, and the key is that each path has its own, set of pros and cons. Risk, cost, how easy it is to manage.
Understanding those trade-offs is really what empowers you, the listener, to make a choice that fits your situation, your goals, how much risk you're comfortable with.
Exactly. And don't forget the practical bits we talked about. Where are you going to store physical silver safely? What are the fees on that ETF or mutual fund? Those details matter for your bottom line.
For sure. So here's a final thought to leave you with.
Hmm.
We've talked about silver's role in industry, potential price moves, its history as a store of value. How might maybe even just a small, considered allocation to silver fit into your bigger financial picture? Could it add some resilience, maybe some potential growth over the long term?
Yeah. Something to definitely mull over as you map out your own financial journey.
Cool. Thanks for diving deep with us today.